Okay, let's get right into the stock market technical analysis. We're going to use technical analysis and the charts to tell us where the market and individual trade ideas might go. So if you're new to the channel, I cover stock market technical analysis, typically go through the general markets, then we look at individual trade ideas, and we wrap up. Guys, leave me a thumbs up as I go along if you find value in the content. And if you're new and you want to learn about how to use the charts to find your next trade idea, take my technical analysis course. I've got that in the link in the description below, so check that out. It's a good value on that course. Okay, guys, so we gapped down this morning, big gap down. Again, it's been more downward price action. Anybody that's been following me for a while, you know, we shorted right here January 4th, so we've caught a big part of this move. And in fact, if you roll out and look at the weekly chart, we've really captured the biggest downward move in triple Qs really since COVID, since the COVID crash right here. This is the biggest move, since that time. So now where are we at now? All right, on the weekly chart, I see this upward price channel here on Qs. So this is going back to 2008. And as I roll out, you can see right there, we just hit the top end of that trend line. So, it makes sense that there's a little bounce here, or, we're finding a little bit of support here because people notice this and they're seeing that support. The other thing is on the daily, we did hit or came very close to this support level I talked about, 316.24. They stepped in a little bit early and started to buy it up right there. And that really came from the bear flag that I've had marked out on the daily chart. You can see here's your flag pull, and then we did the flag there. And then you take that flag pull and just move it to the high end of the flag, right where it breaks down, So if it breaks down, we want to basically put it right in this area. And the projected target was about 318.37. It's about 318.20. And today's low, if we go to the hourly chart, was about 318.36. So just about 16 cents off from that projected target. So again, that's good enough for government work. Okay, where do we go from here? So as I'm looking at the charts, on the hourly chart, you can see the gap down today. They just basically bid it up and have filled the gap, and that's where the sellers are at right now. You see these 3 hourly candles. They're stepping in and pushing this thing down. So we got to see where we close the day at. It's probably going to close right around this 329.30 area, but we'll have to see how that closes. We do have on the hourly chart slight bullish divergence. So there it is right there. And we have it on the PPO. Okay, not fully confirmed yet. You see the PPO, how it's still kind of, let me zoom in. Let me zoom this in. See how it's still pointed down right here? It's not really pointed up. So we don't have a confirmed bullish divergence. And if they start to sell this thing down from here, then likely we're going to, continue to roll down and burn through that divergence. So that's what I think is going to happen. I think we're likely going to the daily chart now. I think we're likely going to just stop right here and then continue to sell down. Next target on this triple Qs is about I have it at about 298, give or take. Again, you'll probably want to step in a little early and cover. I think that's an area where we're likely going to see a more sustainable bounce. So this is what I'm looking for. I'm looking for continued downside down to about that area. Then we probably bounce back up to this, all the way up to this 332 area, and then we continue lower over time. All right, so that's kind of the bigger picture. And there's also a downtrend on the daily chart. We're in a downtrend right now. That has not changed. So the downtrend really started back near the all-time highs, and you can see it marked in blue right here. I'm going to go ahead and get rid of this flag here because we don't need that anymore. That's really played out. So we have this downtrend to watch. So I suspect we're going to run down, hit this 300 area, and then bounce into the downtrend line, and then continue lower. That's bigger picture, long-term stuff. Let's move on to the SPY. Okay, on the SPY, we did complete that flag as well. So the flag, I've got it kind of marked out. There's your flag. Well, Actually, we'll take it here. It's really this one here, and it's marked about there, and then you go from there to there, and the projected target was about 410, and sure enough, that's exactly where we opened at today. So it makes sense that we bounced off of the opening because we opened right at major support. So the buyer stepped in, they saw that support, they stepped in and bought. Technically, though, nothing's changed on this downtrend. We still have, you know, a clean downtrend, and we're just kind of rallying off that support. So I am looking for more downside in the SPY. Next level of support, you know, I'm looking for a potential move all the way down to this 338, 339 area. That's kind of your pre-COVID highs right before COVID hit. I think that's the target right now for this first leg down and what I'm considering to be the start of a bear market. Now, why do I think it's the start of a bear market? It's things like Amazon. When I see Amazon and I go to this weekly chart, okay, coming off of this is your weekly trend line for the last, since really 2001. But we really, we could just say we established the trend here in 2008 in the Great Recession lows. And you can see 1, 2, 3, we've got 3 tags of that. And as I zoom in, there it is, that's a sell signal basically. So big weekly sell signal, back test, and kind of holding at this support area. It looks like they're trying to hold this weekly support, but we're still below this upward trend line. So I would expect, whether we hold this and kind of chop around a little bit, I would expect lower prices in the near future. Also, another reason why I think we're probably going lower, you look at Amazon, and all I'm really seeing, I don't see any bullish divergence. So as I kind of clean this up here, you'll notice that we gapped down today and we made this low right here, but it was still higher than these former lows right in this area, and momentum was moving up. So you can see here, momentum moving up, price, is really moving up. This is not a divergent low. You want to see prices making a new low while momentum is higher. So I don't see negative, I don't see bullish divergence here telling me that, okay, this is a reversal point. What I think is this was just a gap down to support. They bid it up, and then they turn around and sell it back down here in the next few days. All right, so that's what I'll be looking for. And moving on, IWM, this is small caps. Again, bigger picture on the small caps. This is a daily chart, but we have a big topping pattern, all right? And that's we've now started a downtrend. So look, we're making lower highs, all right, and lower lows. Okay, and there's a new low today. So no change in the trend. The trend is still down, even though today seems bullish because you're getting a gap down and then a move up. Again, that's the slope of hope that I talk about. It's still a sell the rip market, and that slope of hope, when you gap down, everybody panics, and then as they see it rallying, they see their money coming back, they don't get out of their positions. It keeps them in their positions, or it shakes shorts out, shorts that there's probably a lot of kind of beginner shorts that got short after the news. And again, taking positions based on headlines and news is not how you want to be trading. All right, we want to use the charts and the technicals to tell us where this is going, and we want to just follow the charts. That if you take a short, if you short on a news headline, they're going to run it against you and knock you off the trade. The other thing on this one for IWM, the flag has not played out yet. So if I go like this and just move this down to like there, we still have a ways to go for this flag to continue. So it looks like we've got some lower prices here in the near future. And if I look at the weekly chart, it's a perfect flag on the weekly right here. So here's your breakdown point. Okay, and this breakdown point, if you carry it over on this flag pattern, it's still projecting us to move down to about that 170 area. And we're still, still looks good to me. So I'm not getting out of my shorts for right now. I'm hanging tough and looking for more downside. Okay, coffee. Joe looks like a short. Unfortunately, my broker doesn't have any shares of this to short right now, so I just want to point it out in case you can grab it. But on coffee, this is a commodity, an ag commodity. They've been very, very strong, and this is part of the inflation trade, but it's likely due for a correction. And I want to point this out. We've got negative divergence, all right? That's been building for a little while, so This was your last, let me move this tool around. This was your last divergent high right here. We have a clean uptrend line right there to watch, and we have a break of trend and a sell signal today, at least as of right now. So we'll see how this closes. If they close this, you know, basically where we're at or lower, then that's going to be a pretty clean sell signal. That's a weekly chart as well. If I go to the daily, there it is. All right, that's a breakdown. First level of support, 58.63, and what I would expect is a good trade idea, I think, for this would be to probably trade this down at least to this level and probably a tag of the 200-day. This is moving up, so maybe it's going to come down, kind of grind around, and then hit that 200-day. That's the trade idea I think I like on this. I wouldn't go for much lower than that. And I know it doesn't look like a lot, but again, I use log scaling, so it kind of hides the percentages. But from where we're at right now, if we're going to hit that 200-day, looking at about a 14-15% gain. And this level right here, that's a move of about 9%. And if we pop back above here, you know, then you could probably just stop out. All right, so that's the trade idea that I think is in play on this one. Oil, all right, so oil has this trend line on the daily chart right here, and you can see that it looks like it's a back test. I can't quite tell yet, but here's the hourly chart, and you can see here's your uptrend line on oil. This is oil futures. We back tested once. Now they've recovered that trend line right here, and we're coming in and holding that trend line. So again, it's not, you know, I'm not really interested in shorting oil, but I am looking at this DVN as a potential short. Still no actionable trade on this yet. So again, we have this uptrend line right here. We have clean negative divergence on both momentum indicators telling me we're going to get a breakdown soon, but we don't have that breakdown yet. So I'm just looking for a break of this trend line right here, a nice impulsive breakdown. You want to see a big red candle breaking through that, a gap down, something like that. That will be your sell signal. Until then, we'll continue to watch. Nvidia, I really like this one short still. So on Nvidia, you know, we hit a level of support that I had marked at about 208.60. We pretty much opened right there. The buyer stepped in. We're still below the 200-day moving average. So let's see how we close, you know, the day. If we get a close below the day, I was looking at this chart, and we closed yesterday below the 200-day moving average. See that 200 sitting right there? You know, it's about 230.80. And if we close today, that'll be 2 consecutive days closing below the 200. Now that's not, you know, in itself anything or everything, but as I roll out and look on this one, I can't find 2 consecutive days closing below the 200-day moving average. Maybe right there in, you know, in this COVID crash. Let's zoom in. No, I don't even really see 2 consecutive days closing below the 200 there. Is really back here when we were towards the end of the last bear market back in, this one was this was back in October 18. It wasn't a bear market for the markets, but for this, Nvidia fell 58-60% back then. And that's the last time I can see us closing 2 consecutive days below the 200-day moving average. So something to note there. It's moving back to where we're at right now. Looks like we're just rallying right into that, you know, kind of filling the gap from this morning, and then I think we'll continue down. That's what I'm planning on. And Tesla, you can see Tesla basically gapped down and rallied right back into that gap fill from today, and then they've been selling it ever since. So we'll see where this closes. We're still below the resistance level that I have of 778.87. Or it's about 780, and then cleanly below the 200-day moving average as well. So basically what I'm trying to say is I don't see any technical change in the downside movement. I think there's more downside to come. I see no indication that tells me it's time to get out of the shorts. So I'm sticking with most of my shorts for now. If something changes, I'll point it out to you guys as fast as I can. Otherwise, guys, check out the course. If you haven't done so, leave me a thumbs up. And if anything gets crazy towards the end of the day, I'll put out the end of the day video. All right, catch you on the next one. Bye.